Welcome back to Boni's Life, the channel where we do not guess, we analyze. We do not speculate, we investigate. And we do not panic, we plan. I am Boni, and if you are watching this right now, you are already ahead of most traders simply because you chose to be informed before you placed a single trade. Today is Sunday, May 10th, 2026, and this week coming up is not just another week in crypto. This is the kind of week that can make or break a portfolio. Bitcoin has just reclaimed the $80,000 mark for the first time since January. Institutional money is flooding back into the market, and on Tuesday, the United States government drops inflation data that could either ignite a massive rally or send the market into a sharp correction. So buckle up, because in the next 30 minutes, we are going to cover everything: the technical picture from last week, the global events calendar for this week, expert views from the biggest names in finance, and a clear, actionable trading strategy for each major asset. Let us get into it. Let us start with the numbers, because numbers do not lie. And this week, the numbers are telling a very interesting story. According to live data from CoinGecko and CoinGlass, Bitcoin is currently trading at $80,712.45. That is a 3% gain over the last 7 days and a 12.4% gain over the last 30 days. Now, some of you might say, Boni, 3% in a week? That is nothing. And to that I say, context is everything. Bitcoin was sitting in the low 70s just 2 months ago. It has climbed 26% from its February lows. That is not a small move. That is a structural recovery. Now let us talk about the technical structure. The Relative Strength Index, or RSI, is sitting at 65.6. For those who are new to technical analysis, the RSI measures momentum on a scale of 0 to 100. Above 50 is bullish, above 70 is overbought. At 65.6, we are firmly in bullish territory, but we have not hit the danger zone yet. There is still room to run. Bitcoin is holding comfortably above the 50% Fibonacci retracement support at $78,920, and the 100-day exponential moving average sits at $75,886. As long as we hold above those levels, the short-term trend is intact. But here is the critical level that every trader needs to have on their radar this week. The 200-day simple moving average sits at $83,000. This is the single most important technical level in the entire market right now. The 200-day SMA is the line that separates a bull market from a bear market in the eyes of institutional traders and algorithmic systems. A daily close above $83,000 would be a massive technical signal, opening the door to $89,000, then $94,000, and eventually the psychological level of $100,000. But if we get rejected at $83,000, expect a swift pullback to test the $78,920 support zone. That is your battleground for the week. Now, let us look at the altcoins, because the picture there is more nuanced. Ethereum is trading at $2,326, up just 0.8% for the week. Compare that to Bitcoin's 3% gain and the overall market's 2.4% gain, and you can see that Ethereum is underperforming. The ETH to BTC ratio has been declining, which tells us that capital is flowing into Bitcoin rather than rotating into Ethereum right now. This is not necessarily bearish for ETH. It just means that in this particular phase of the market cycle, Bitcoin is leading and Ethereum is following. Patience is required here. Solana is at $93.47, down slightly on the day. What is particularly interesting here is the negative funding rate on Solana derivatives. For those unfamiliar, when the funding rate is negative, it means short sellers are paying long holders to maintain their positions. This is a sign that the derivatives market is leaning bearish on Solana in the short term. However, and this is important, a negative funding rate in a rising Bitcoin environment can actually set up a powerful short squeeze. If Bitcoin breaks above 83,000, the forced buying of Solana shorts could create a rapid, violent upward move. That is something to watch very carefully. And then there is XRP, the standout performer of the week, up 9% and trading at $1.42. The daily chart for XRP is showing a textbook cup and handle pattern, one of the most reliable bullish continuation patterns in technical analysis. The measured target from this pattern points to $1.70. The key level to watch is $1.50, which is the resistance at the rim of the cup. A clean break and close above $1.50 with strong volume would confirm the pattern and give traders a high probability entry. The regulatory tailwinds for XRP, which we will discuss shortly, make this setup even more compelling. All right, let us talk about the week ahead because this is where things get really interesting. I want you to imagine the crypto market as a ship sailing on the ocean. The technical analysis tells you the current speed and direction of the ship. But the macroeconomic data, that is the weather. And this week, there is a significant storm on the horizon. The most important event of the week, and arguably of the entire month, is the United States Consumer Price Index data, releasing on Tuesday, May 12th at 3:30 in the afternoon Eastern Time. The market consensus expects the yearly CPI to come in at 3.7%, up from the previous reading of 3.3%. Let me put that in perspective for you. The Federal Reserve's inflation target is 2%. We are currently at 3.3%, and it is expected to go higher. This is the fourth consecutive year that inflation has remained above the Fed's target. That is not a blip. That is a structural problem. The implications for crypto are direct and significant. Higher inflation means the Federal Reserve is less likely to cut interest rates. And when interest rates stay high, the cost of capital goes up, risk appetite goes down, and investors tend to move away from speculative assets like cryptocurrencies. The US dollar index is currently sitting at 97.78, already weakening slightly, which is actually a mild positive for crypto. But if the CPI print comes in hotter than 3.7%, expect the dollar to strengthen sharply and Bitcoin to face significant selling pressure. On the other hand, if inflation comes in below expectations, the market will interpret that as a signal that rate cuts might be back on the table, and we could see a powerful rally that breaks Bitcoin above $83,000. On Wednesday, May 13th, we get the Producer Price Index, or PPI, data. This measures inflation at the wholesale level, what manufacturers are paying for inputs. The expectation is 4.9% annually, up from 4% previously. PPI tends to be a leading indicator for consumer inflation. So if PPI comes in hot, it signals that CPI will likely remain elevated in the months ahead. Thursday brings initial jobless claims expected at 206,000 and monthly retail sales forecast at 0.5%. Strong retail sales would indicate a resilient consumer, which is good for the economy but potentially bad for crypto, as it reduces the urgency for the Fed to cut rates. And on Friday, May 15th, we have a potentially market-moving event that has nothing to do with data, the expected appointment of Kevin Warsh as the new Federal Reserve Chair. Markets will be watching this very closely, as Warsh is considered more hawkish than the current chair, which could signal a tighter monetary policy stance going forward. On the crypto-specific calendar, Tuesday also brings token unlocks for Avalanche at 0.31% and Aptos at 0.54% of their circulating supply. Token unlocks can create short-term selling pressure as early investors and team members receive newly vested tokens. Saturday, May 16th, sees Arbitrum's token unlock of 0.93%, a notable event for DeFi participants that could weigh on ARB's price. Also on Tuesday, the Ronin network is set to return to Ethereum using the OP Stack framework, which is a significant development for the Ethereum ecosystem and could attract positive attention to ETH. Beyond the economic data, we need to talk about the geopolitical environment, because it has been a significant driver of market sentiment in recent weeks. The US military operation known as Project Freedom, aimed at securing merchant shipping lanes in the Strait of Hormuz amid US-Iran tensions, has provided significant relief to financial markets. The easing of those tensions removed a major risk premium from the market, and Bitcoin responded immediately, rising alongside other risk assets. Since the conflict began earlier this year, Bitcoin has actually gained roughly 20% and recovered approximately 30% from its February lows, demonstrating once again that Bitcoin is increasingly being treated as a macro asset, not just a speculative token. However, energy prices remain elevated, and that feeds directly into global inflation. Which brings us back to the CPI data on Tuesday. Everything is connected, and that is why you need a holistic view of the market, not just a chart. Now, let us hear from the people who have skin in the game. The traders, the institutions, and the analysts who move markets. Starting with the institutional side, the data is compelling. US spot Bitcoin ETFs pulled in $2.44 billion in April 2026, the strongest monthly inflow figure since October 2025. On a single day alone, May 1st, spot Bitcoin ETFs recorded $629 million in net inflows. BlackRock's iShares Bitcoin Trust, known as IBIT, saw $134.6 million in inflows on May 7th alone, bringing its total assets under management to approximately $66.9 billion. To put that in context, IBIT now holds approximately 59% of all spot Bitcoin ETF assets. BlackRock is not dabbling in crypto. BlackRock is dominating it. Tiger Research, one of the most respected institutional research firms in the crypto space, released their Q2 2026 report this week, setting a 12-month Bitcoin price target of $143,000. They cite two primary drivers: continued institutional capital flows and the expansion of global M2 money supply. When central banks around the world print money, that money has to go somewhere, and increasingly, it is finding its way into Bitcoin. Tiger Research forecasts a 103% upside from current levels. Now, I am not telling you to bet the house on that, but I am telling you that when an institution of that caliber puts a number like that on paper, you pay attention. Now, for balance, because on this channel we always give you both sides, let us hear from veteran trader Peter Brandt. Brandt, who has been trading commodities and financial markets for over 50 years, posted on April 23rd that Bitcoin's next cycle peak will land between $300,000 and $500,000, but not until 2029. In an email to CoinDesk on May 4th, he elaborated, "I see Bitcoin reaching 250,000, but only after a prolonged bottoming phase that may last until September or October of this year." In other words, Brandt is saying the big move is coming, but we might have to endure more pain first. That is a sobering perspective, and it underscores the importance of risk management, which we will cover in detail in our final segment. On the regulatory front, the U.S. Senate's Genius Act, the Guiding and Establishing National Innovation for U.S. Stablecoins Act, is progressing through Congress. This legislation requires stablecoin issuers to maintain one-to-one backing with cash or U.S. Treasuries and to be licensed similarly to banks. BlackRock's 2026 outlook notes that stablecoins will increasingly challenge governments' control over fiat currencies. For XRP specifically, the introduction of the Clarity Act provides clearer regulatory rules that remove the legal uncertainty that has historically suppressed XRP's price. And in a landmark development just this week, JP Morgan, MasterCard, and Ripple completed a cross-border XRP tokenized treasury settlement, a real-world use case that validates everything the XRP community has been arguing for years. Fidelity Digital Assets, in their 2026 Look Ahead report, identified two key themes: institutional adoption reaching an execution phase, and regulatory clarity creating a more stable operating environment for digital assets. Their view is that Bitcoin's narrative as digital gold is strengthening, particularly as global M2 money supply continues to expand. And Coinbase's institutional research team highlighted that 2026 will be defined by regulatory progress, technological advancement, and deeper market integration. Even as Coinbase itself posted a second consecutive quarterly loss, a reminder that even the biggest players in this space are not immune to market cycles. All right, this is the segment you have been waiting for. All the analysis in the world is worthless if you cannot translate it into action. So let us build your trading playbook for the week of May 11th to 17th, 2026. And I want to start with the most important rule of all. In a week this heavy with macroeconomic data, the number one priority is capital preservation. You cannot trade next week if you blow up your account this week. So before we talk about entries and targets, let us talk about sizing. In a high volatility macro week like this, I recommend keeping individual position sizes between 2 and 5% of your total portfolio. No single trade should be able to wipe you out. That is not timidity, that is professionalism. For Bitcoin, the strategy is straightforward but requires discipline. The key trigger is the $83,000 level, the 200-day SMA. If Bitcoin closes a daily candle above $83,000 on strong volume, that is your long signal. Your first target is $85,000, your second target is $89,000, and if momentum continues, $94,000 is on the table. However, and this is critical, do not enter before the CPI data on Tuesday. The CPI print could easily send Bitcoin down 5 to 8% in a matter of minutes. Wait for the data, wait for the dust to settle, then act. If the CPI comes in below 3.7%, expect a bullish reaction. If it comes in above 3.7%, expect selling pressure and a potential retest of the $78,920 support. That dip, if it happens, is your buying opportunity. Set your buy orders in the $79,000 to $80,000 range, with a hard stop loss below $77,000. For Ethereum, the strategy is to wait. ETH is underperforming Bitcoin, and in a macro-heavy week, the market tends to consolidate into the most liquid asset, which is Bitcoin. Wait for Bitcoin to confirm a break above 83,000. Once that happens, Ethereum historically catches up quickly. A break above $2,400 on ETH would be your entry signal, with a target of $2,600. For Solana, the negative funding rate is actually an opportunity if you are patient. If Bitcoin rallies strongly, the forced covering of Solana shorts could push Sol from $93 to $105 to $110 rapidly, but this is a higher risk trade. Size it accordingly at the lower end of your range. For XRP, the cup and handle setup is compelling. Watch $1.50 as your trigger. A daily close above $1.50 with volume above the 20-day average confirms the pattern and gives you a measured target of $1.70. The regulatory catalysts, the Clarity Act, the JP Morgan MasterCard Ripple settlement, and the broader stablecoin legislation provide fundamental support for this move. Stop loss should be placed below $1.30. One final word on Arbitrum. The 0.93% token unlock on Saturday, May 16th, is a known supply event that historically creates selling pressure. I would avoid holding long ARB positions into that unlock. If you are already long, consider taking profits before Friday. And if you are looking to enter ARB, wait until after the unlock. You may get a better price. On the other side of the selling pressure, let me leave you with this thought. The crypto market in May 2026 is at a genuinely fascinating inflection point. Bitcoin has reclaimed $80,000. Institutions are buying at record levels. Regulatory clarity is improving, and yet inflation remains stubbornly above target. The Federal Reserve is not cutting rates, and geopolitical risks have not fully disappeared. This is not a market for reckless speculation. This is a market for informed, disciplined, strategic trading. The traders who will win this week are not the ones who take the biggest positions. They are the ones who wait for the right data, enter at the right levels, and manage their risk with precision. That is what we do here on Boni's Life. We do not chase, we do not panic, we analyze, we plan, and we execute. If this episode gave you value, and I believe it did, please hit that like button because it tells YouTube that this content is worth sharing. Subscribe to Boni's Life if you are not already subscribed, because every week we bring you this level of analysis completely free. Drop your questions and your trade setups in the comments below. I read every single one, and I respond to as many as I can. And share this episode with someone who is trading crypto this week, because the best gift you can give a fellow trader is accurate information. I am Boni. Stay informed, stay disciplined, and I will see you in the next episode. Take care of yourselves and take care of your portfolios.